Welcome back to the Japan FinTech Observer. Get ready for a quick hit of the latest news in Japanese finance and fintech. We're diving into the headlines, breaking down the trends, and leaving you with the insights you need to stay ahead of the curve. Let's go.
For anyone following Japan's startup scene, FUNDINNO is a household name. As the country's leading equity crowdfunding platform, it has provided a vital funding channel for early-stage companies. Now, FUNDINNO has stepped into the spotlight itself with its IPO. IPO filings, like the Yukashokan Hokakusho securities report, are notoriously dense, packed with financial tables and legal disclosures. However, buried within this complexity is the real story of a company's performance, strategy, and ambition. These documents cut through the marketing hype to reveal what's actually driving the business. We've analyzed FUNDINNO's filing to distill the most surprising and impactful takeaways. These 4 points reveal a company that has undergone a dramatic transformation, found a powerful new growth engine, and is building something far more ambitious than a simple funding platform. First, the jaw-dropping pivot from massive losses to profitability. For years, FUNDINNO's story was one of aggressive growth funded by significant upfront investments, particularly in personnel and advertising. This strategy led to substantial, consistent losses. The company reported a consolidated net loss of 1.42 billion for the fiscal year ending in October 2024, following a similar consolidated net loss of 1.43 billion in the fiscal year ending October 2023. This history of operating in the red was the accepted cost of building a market-leading platform. However, the IPO filing reveals a stunning reversal. In the first 9 months of the current fiscal year, from November 1, 2024 to July 31, 2025, FUNDINNO recorded its first ever operating profit, reaching a positive 159 million. This is not a minor shift. It's a fundamental change in the company's financial narrative. This pivot from deep losses to profitability marks a critical inflection point. It serves as powerful proof of the scalability of FUNDINNO's investment-led model. The analysis suggests that the long-term upfront investments in its platform, personnel, and marketing have successfully built a foundation strong enough to generate profit, validating the strategy of absorbing early losses to build a market-leading and now sustainable operation. Second, the real growth engine isn't what you think. While FUNDINNO is famous for its public crowdfunding platform that democratized startup investing for retail investors, its primary revenue driver is now a different, more powerful service. The filing makes it clear that the company's recent explosive growth is overwhelmingly powered by FUNDINNO++. FUNDINNO++ is a service tailored specifically for professional investors. Unlike the original platform, which has a cap of 500,000 per investor, per company, annually, FUNDINNO++ has no upper limits on investment size. This allows startups to raise much larger rounds of capital from a curated group of sophisticated individual and institutional investors. The financial data underscores the strategic impact of this move upmarket. In the first 9 months of the 2025 fiscal year, FUNDINNO++ generated 1.244 billion in revenue. In contrast, the original FUNDINNO service, which targets early-stage companies, generated 380.9 million. By creating a distinct service for the larger funding needs of middle and later-stage startups, FUNDINNO has evolved from a platform for small seed rounds into a key player for pre-IPO funding, significantly expanding its total addressable market and capturing value across the entire startup lifecycle. Third, they're building an entire ecosystem, not just a funding platform. A deeper look into the filing reveals that FUNDINNO's vision extends far beyond simply connecting startups with investors. The company is strategically building a complete risk money circulation cycle that functions as a powerful competitive moat. Their platform is structured across 3 distinct domains. Primary domain. This is for initial capital raising through the core FUNDINNO and FUNDINNO++ services. Growth domain. This area supports startups after they've secured funding. By integrating services like FUNDOR, a SaaS platform for shareholder management, and FUNDINNO Growth, a hiring support service, the company creates high switching costs. A startup using FUNDOR is deeply embedded in the ecosystem, making it far more likely they will turn to FUNDINNO++ for their next funding round. Secondary domain. To provide liquidity for investors, this domain includes FUNDINNO Market, a platform for buying and selling unlisted shares, offering an exit path before an IPO or acquisition. This comprehensive approach is guided by the company's ambitious mission statement: to create a future where everyone can challenge fairly. By building an integrated ecosystem rather than just a funding website, FUNDINNO creates a durable competitive advantage. It solves multiple pain points in the startup lifecycle, from funding to management and liquidity, ensuring both startups and investors remain on its platform. Fourth, he numbers behind the national push for startups. FUNDINNO's rapid ascent is not happening in a vacuum. It is a critical beneficiary and primary enabler of Japan's national strategy, specifically the government's Startup Development 5-year plan. This plan, which aims to increase startup investment tenfold to 10 trillion by 2027, has created a massive tailwind for FUNDINNO. In turn, the government needs platforms like FUNDINNO to succeed for its policy to become a reality, creating a powerful symbiotic relationship. The filing highlights 2 key performance indicators the company uses to measure its success: gross merchandise value, GMV, which the company defines as the total value of funds successfully raised on its primary platforms and shares traded on its secondary markets, and the number of registered professional investors. The growth in these metrics is staggering. Grew from 11.0 billion in Q4 2024 to an incredible 41.7 billion in Q3 2025. Professional investors increased from 1,011 at the end of fiscal year 2024 to 1,470 by the end of Q3 fiscal year 2025. These figures demonstrate immense momentum. They serve as powerful market validation, proving there is significant demand from both startups seeking capital and investors looking for opportunities in Japan's private markets, amplified by a strong policy tailwind. In conclusion, a new era for Japanese investment. FUNDINNO's IPO filing reveals a company that has not only mastered the economics of its core market through its pivot to profitability, but has also built a powerful, defensible ecosystem that functions as a competitive moat. This combination positions it as the central private sector engine for Japan's national ambition to create a globally competitive startup hub. As FUNDINNO steps into the public market, it raises a larger question for the entire ecosystem. Is this the moment Japan's unlisted stock market finally comes of age? And what will that mean for the next generation of entrepreneurs and investors?